It's been so incredibly busy at work, but today I thought it would be a good idea to make a live, surprise live, right? See how many of my followers pay attention. Don't forget, like and subscribe if you're watching this a little bit later or not live. Give me here 1 or 2 minutes to see if some people join. Um, Otherwise, feel free to move forward to minute 2 or minute 2.5. For all of you watching on, I repeat, it's been quite the eventful week. I thought it would be a good idea to come here and discuss a few things. So, are people happier now, or not really? It's a good question, huh? Oh, I see Dia. Welcome, welcome. Don't forget, drop that like and subscribe if you haven't done so. Thank you for joining. It's been quite the interesting Poor Man's Investing. Thank you very much. Don't forget, drop that like. Greatly helps. Exciting time. So are people happier now? What happened to all the guys predicting the bear market? Are those finished now? What happened to all of those crypto experienced people saying, "Oh, we're going into a bear market, a Trump-induced bear market," and all this kind of stuff? They disappeared. They all disappeared. There I see. Now, you see all of them talking about global M2, liquidity, easing of financial conditions, all of these things, right? But I've been talking about it with the prices down, saying, look forward. It's very clear where we're going to go. Now, there's going to be a point where we're going to look back in time and say, of course it was obvious. You have New Hampshire approving a Bitcoin strategic reserve. You have Arizona doing the same. You have this, you have that. You have Trump, who's a crypto guy. You have banks are now allowed to trade and store and do all of this for crypto. Of course, you have sovereign wealth funds buying crypto. You have governments buying crypto. Of course, crypto is going up. All of these things happened in Q1. But what happened in Q4? Q4 2024, liquidity conditions went down. So liquidity went down. Hey guys, welcome. Don't forget, like and subscribe. I see 11 people, only 4 likes. Somebody's not doing their job. No, I'm joking, guys. You don't have to give me the. If you don't want to give me the like, don't give me the like. I'm just messing with you. You guys know that I do this for fun. So, liquidity conditions. Now I'm going to say the same thing that I always say, but now with the prices going up, hopefully people finally see it. Q4 2024, liquidity went down and financial conditions tightened. That means dollar up, yields up, bonds down, oil prices up, liquidity constraints. No good. But there's a 3-month delay. So when do we see it? In Q1 2025. Oh, but it was the tariffs. It would have been something else. It doesn't matter. The tariffs is a catalyst, is the match that lights the fire. Now, the match can be tariffs, or the match can be Pakistan, or the match can be Iran, or the match can... It doesn't matter. You just need a reason for things to be less perfect, and then you start seeing the effects on asset prices. But what happened in Q1 2025? The same liquidity conditions that turned so poor in the Q4 reversed completely. Oil prices came crashing down, the dollar came down, yields came down, bonds went up. All the things we wanted to see. So what I've been saying for the entire Q1 is Q2 should be very good, particularly around May. Why? Because liquidity and financial conditions say so. Now, I don't know what's going to be the narrative. Maybe we start getting some trade deals. We got the UK. Check my previous video. What did I say? A trade deal will happen this week. Now, how can I know that? I actually had a friend of mine. He asked me if I if I had contacts in the U.S. government. No, it's quite obvious. Why do I get the feeling that after the meeting in Switzerland, we're going to see some easing of tariffs? Maybe to 50%? I don't know. We'll see. The US is about to sign a minerals deal with Saudi Arabia. Nobody's paying attention. Saudis, the US already gotten close to $4 trillion in investment in the country. That's 4 times Biden entire term. Nobody's paying attention. Those are all the fundamentals that will allow for the future, but they're all happening now. So what do we say in this channel? First fundamentals, then price, then narrative. Fundamentals drive price with a delay, but we live in a world where we have no patience. Everything needs to be tomorrow. Oh, how is not Bitcoin at 500 million? What is this? It's terrible. Hey, guys, chill, right? I mean, another thing, we've been talking about it. The Fed won't cut rates. They didn't. But they will do QE under a different name. I don't know what it's going to be, or if there's going to be a name. Is altcoins? Oh yeah, alt season is still coming. Again, probably I'm going to drop this one for you. There's a very good chance Bitcoin dominance topped today. And I am sorry that I could only record this evening because I wanted to say this in the morning, but we'll see. I think there's a very good chance. Now I have to say this already because I already know how it's going to be. Are we going to have pullbacks? Yes. Are we going to have sell-offs? Yes. Are we going to have potentially 30% corrections in Bitcoin? Yes. Is 92K Bitcoin still on the table? Unlikely, but yes. Even if you go to 92K, it would still be bullish. But once again, about a week ago, 92K was very bullish. If we go to 92K, it's very bearish. Now everybody wants Bitcoin again. What's the difference? I said here, when Bitcoin dropped to 74K, there's a very good chance that was the bottom. And actually, I said it the week before it happened. I said this is most likely next week, between Monday and Wednesday, you're going to see the bottom. You actually got a double bottom, one on Monday, one on Wednesday. And I also mentioned nobody wants Bitcoin at 74, but they will want it at 95 and 100. It's the same Bitcoin. Does the same thing. And by the way, this includes the Wall Street guys. It's not just people like you and me. It's the Wall Street guys. People don't learn. If you follow a simple strategy, which is when the fear and greed index is at fear or extreme fear, you buy. And when the fear and greed index is at greed or extreme greed, you sell, you're going to do very well. But people won't do it. It's always the same. Now you should think about all the X accounts and all the YouTubers you follow. Think about the ones telling you about a bear market. Think about the ones telling you Bitcoin's going to go to 60 and 50K and 30K. And think about them for one simple reason. In a very short time frame, they're going to start deleting videos because their goal will be to capture the attention of newcomers to crypto. So they will only see the videos in which they're bullish. Oh my God, this guy's bullish at the right times. This guy's bearish at the right times. No, they are always in the wrong times. They're always on the wrong side of history. A little bit like the Financial Times when it comes to economy. Financial Times is always wrong on the economic side. Like they're very good on reporting on companies, etc. But when it comes to economy, always wrong. If people just do the opposite, it's like, I think they're worse than Jim Cramer, which is quite amazing. I think probably a monkey would be like blindly pressing stuff, would get more things right. But I diverge. So what are we seeing today? Because this is important. The dollar is going up, yields are going up, bonds are going down. That means tightening of financial conditions. That means liquidity will drop if this continues for a long time, which means you should see it in July, August for a potential correction. If, because I need to repeat this very slowly, if this continues, got it? Oh, you said there's going to be a massive correction in July and August. No. If liquidity goes down, because oil prices are a bit up today, the dollar is up, and bonds are down, and yields are up. These are all restrictive in terms of financial conditions. Now, one day is one day. I'm talking if this remains like this, it's going to be a negative impact. And by the way, in the auction results of the treasury bonds, guess who was buying $30 billion? Oh, the Fed. Selling bonds, QT. Buying bonds, QE. They were going to do QE without doing QE. That's it. Because he's not going to cut rates, because unless the data becomes so obvious that he has to do it. Because guess what? The Fed is political. Very political. Janet Yellen was Fed chairwoman during Obama. 0% rates the whole time. Trump gets elected, raises rates immediately. Fed Powell cuts rates for no good reason right before the election. Trump gets elected, no more rate cuts. Bernanke, when he was asked, hey, would you have done something different in the financial crisis, because all the you were always saying that it was contained to subprime, it was contained. What did Bernanke say, the former Fed chairman? Oh, we were part of the administration, so we had to say that. What? I thought you were independent. See, sometimes you have these little bits of truth out there. They come very often, very once in a while. But if you pay attention, you do see them coming. Where do I see ETH going this summer? So, by the way, ETH, because Jerry also asked about this. Sorry. So, ETH got a very big upgrade yesterday. Nobody paid attention. The Pectra upgrade. So, basically, it becomes the user experience much better, privacy and security improve, and ETH just turned deflationary, which is very good. ETH can, I think, really surprise. I mean, maybe not this summer, okay? So please don't quote me for this summer. I think by the end of the cycle, I still think a 10x for ETH is not ridiculous. And I'll tell you why. I mean, this is my opinion, okay? Please don't trade off of this. If you want to trade, it's up to you, but don't take this as financial advice. ETH has all the influencers against it, meaning they're all out. ETH is owned a lot by BlackRock and by the US president. ETH, more importantly, is hated, which means people cannot sell. They already sold. They can only buy. ETH has massive net short positions at around $3,000. We're talking $2.5 billion. Close to $3 billion. For you to have a little bit of perspective, $3 billion of buying pressure is 2 Bybit hacks in one. So the Bybit hack was $1.5 billion that was sold. That's selling pressure. There's 3 billion of short positions at around $3,000 each. There's almost none of it in the exchanges left, and it's a contrarian play, meaning the crowd doesn't believe in it. Very important, not just the influencers, the crowd as well. That to me is very beneficial, because all the entire crowd is positioned on Solana. So all of them are on the same place. meaning they're already positioned, they're already bought. Now, does that mean Solana is not going to go up? Of course, Solana can, and I believe will go up. So I'm not predicting that Solana is going to crash and then everything's going to go up. No, that's not what I'm saying here. I'm saying if, as my view, it can surprise a lot of people. I mean, look, my predictions have been the same. I built my channel. My first video was in June 2023. June 2023. Bitcoin was around 20K. ETH was around 1,000, 100, something like that. And I came here and I said my prediction for the end of the cycle, because there's always a guy there saying that I predicted ETH 15K, like January 2025. I never said any of it. I've always been very consistent. End of the cycle. I predicted Bitcoin somewhere between 242,000 and 276,000 by the end of the cycle. And I predicted ETH between 24 and 29,000. That's it. That's always been my prediction. Now, particularly with Bitcoin, has been quite funny because when I made that prediction, Bitcoin was around 21,000 or something. So people say, oh, this guy's a complete lunatic. That's never going to happen. Look at the market. It's terrible, blah, blah. We have high interest rates. We're going to make it, etc. Then it became, oh, that prediction maybe not so stupid. Now, that prediction is considered bearish. So I'm like, I went from the lunatic on the bullish side, and I went to the bearish guy who's very conservative and completely crazy. ETH versus Sol long term, I think both of them will do well. And Solana has an advantage which is smaller, so it in the theory it's easier to pump. But next cycle, you have to understand now, this is very important. Next cycle, everyone will think that Solana will do amazingly well. So I wouldn't be surprised if Solana kind of disappoints next cycle. But I think Solana, I think Solana is a good project. I think it services the needs of the people, which is why it was created. By volume is by far the number one. I just think Ethereum is more likely to be taken by institutions. And it doesn't matter. Now, this is the point. It doesn't matter my opinion. It doesn't matter your opinion. It doesn't matter if you like it or if you dislike it. It's completely irrelevant. If institutions go for Ethereum, they have more money than all of us in this life 1,000 times. If they choose Ethereum, and I think it's more likely they're going to choose it because it's more battle tested, it still has the most value locked, it has by far the most stable coins, and I think the battle testing is very important because you need to understand, if a JP Morgan starts, for example, just give an example, if a JP Morgan starts doing bonds for clients on the blockchain, and then the whole thing gets hacked or they lose the customers' money, it's a big disaster. So it's a bit like, okay, if we're going to do this, which one is the safest in terms of battle testing? The problem with Solana is it's way more centralized than what you think in the validators, and it is more, it's down from time to time. From time to time, it just goes down, right? So that can be a little bit, for meme coins, people don't care. They just wait. Solana is down for 48 hours. Okay, fine. We wait 48 hours and we come back. Yeah, you can do that if you are a company about to issue $1 billion in debt. And all of a sudden you have to wait because the whole chain is down. So it's really a situation if institutions pick Ethereum, and I think it's more likely they will pick Ethereum because I think it's an easier pitch. You need to understand, these are old organizations, old, heavy, averse to change. They're not. Look, I love Pulse Chain, right? I have no idea. I have no I have no drama, or I have no fantasy that Pulse Chain is going to be picked by BlackRock. No, no. right? I'm not going to pretend that it's going to do it because I don't think it is. By the way, Richard Hart is back, which is good. He did beat the SEC once and for all, which is also good. And I think there's some rumors that he's about to beat Interpol as well. So that would be very, very good. But the most important will be Ethereum price, liquidity conditions. That's the key for all of us. And by the way, thank you very much for that comment on loving the channel. Really appreciate it. Now let's just talk a little bit about the situation with the deals, right? Trade deal with the UK. Oh, but the UK is a very relevant country in the great scheme of trading with the US. So we don't understand why prices are up so much. God, it's the signal. You're giving light to the road. So big money. Oh, I get it. Plus 1 month, less 1 month. You're going to eventually get somewhere here. I can dig with that. I can deal with that. I think we were getting to a point in which announcement about talks and about how close we were to deals were not happening. We're not having an effect anymore. And by the way, there's going to be a time where the trade deals will have zero impact. Why? Because the market will have priced it in. Very important. This is as diminishing returns. Now, it's going to be an exception. When the US does a deal with a bigger nation, Japan, Canada, Mexico, South Korea, India is going to be a big one. Because India is already on the plans to be the #1 trading partner by 2030, $500 billion a year, in case people have not paid any attention to it. So that deal is much more important than people think, not just for the present, but for the future. Those, I think, will have outsized impacts. But the point is, the market will start pricing in where we are going into the future. And then I think as moods calm down, probably we're going to see the tax bill passed. We're going to see the deregulation efforts by the end of the year. That is all deflationary. So my point is the same as it always been. Let's see those deals. And then we can judge. Not judge today. Like, for example, I saw Andrew Cuomo, talking about this and saying, oh, this is already terrible. That's it. It's already factually terrible. I say, okay. So if you look, so this is a guy who says, oh yeah, because 1 month was very rough, then the whole thing is a big failure. Really? This is how short term, this is how people are desperate to be against stuff. So according to him, the Second World War was lost, right? Because the first couple of years, things were not going well. This is the mentality. You have to wait for the finish line to make a judgment. You cannot judge in the middle. It's like, oh, this team has already won because they won the first quarter. Yeah, but there's 3 quarters left. Oh, it doesn't matter. It's already won the first quarter. 10-0, right? Touchdown and a field goal. They already won. That's it. What? So you see how people are. This is the problem when they get emotional. They get emotionally attached to positions, and then they make complete fools out of themselves. Now, let's pay attention to those liquidity conditions that will tell us a little bit about the future. There's going to be a time where people will front run the liquidity cycles. Usually they can't, because there's 3 months in between the events. And then something happens that looks so plausible to justify why we're going up or down. Then no, it has nothing to do with the liquidity cycle. It was all because of this thing that happened. And they miss it. And when people say, if this was so easy, everybody, all the Wall Street guys would be completely, doing much better, stuff like that. Really? Explain to me why 88% of the funds underperform the S&P 500. Aren't they filled with PhD guys doing research and analysis all day long, and they underperform the S&P 500? How can you explain that? In any case, let's keep it short today. Guys, thank you very much for coming in. I think we have a lot of fireworks to come. think about all the influencers that told you and sold you stuff being completely wrong. Learn from it and consider, maybe, not so sure if I should follow this person anymore. Have fun checking people deleting tweets and videos. It's going to be quite amusing. Today was an important day. ETH above 3,000 would be very, very good. There's a gap at ETH 2,600 and then another one at 3,200. So let's have some fun looking at it. Don't forget, like and subscribe is the only thing that I ask. I'll catch you in the next one. Enjoy. And thank you very much for the very positive comments. I really appreciate it. Thank you, guys.